Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, January 16th, 2026. S&P 500 currently sitting at 69.51. I'm David Zarling. I'm here with Ian McMillan. Thanks to you and Kevin for covering last week.
It was my pleasure.
Yeah, appreciate it.
If I worked at Chick-fil-A, that's what I would say.
Ooh. Would you be inside, outside? Kind of like the outside gig.
I guess I'm such a weakling when it comes to cold weather. You know
Okay.
this. But I think the yellow vest that I get to wear is pretty cool. And they go so fast. It's pretty quick out there.
Yeah, they do a good job.
Probably didn't have time to think about how cold it is.
Are you Chick-fil-A sauce guy? Have we covered this already?
I'm not really Chick-fil-A sauce. I'm pretty classic ranch.
Yeah.
My wife does Polynesian.
Ooh. Okay. Yeah. My wife and my daughters are not Chick-fil-A sauce people, but me and my boys, I don't know why else you go to Chick-fil-A.
That's true. That's a good point.
Well, plenty to cover again this week for our listeners. Where do you want to start?
Yeah, stocks off to a pretty good start. Obviously, like anything, some stocks doing better than others. Could this be it? Could this be it for small caps?
Could be.
Or is Lucy gonna pull the football on us?
I mean, I think at minimum it's a nice indication that they're going out to new all-time highs on an absolute basis. And I find it interesting that your Mag 7, your FANG stocks continue to lag. Small caps are doing this. Is that a trend that continues throughout the year? I guess we have to see and find out, but there appears to be some opportunity there.
Yeah, pretty brutal. I know we've talked about Apple and Microsoft in the past. I think they both look pretty. Microsoft or Apple again today, you're still back below 260, which was those highs from late 2024, like Christmas 2024. It's a rough look. You're below a relative 200-day. Microsoft's even worse. Microsoft, I think, might be below an absolute 200. Yeah, it's below an absolute 200-day. Below 467 is a pretty rough look. Could be a fail breakdown. I will say that right now, if these turn into failures,
Oof.
which we won't know for, we wouldn't know for a few days, I assume. But if Microsoft was to get back above 470, 475, probably have to get back above a 200-day, which is still rising.
Right. That is a good catch because,
That could be something.
if you get below that and rip higher and you got an RSI divergence but yeah, I think it is notable that both Microsoft and Apple on a relative basis to S&P definitely lagging. Microsoft is where it was in March of 2025 versus the S&P 500. It's really at the same level it was back in July of 2020. So there's been really no differentiation in return, whether you own the S&P or Microsoft since July of 2020. And then you look at Apple, really no differentiation in whether you own the S&P or Apple since September of 2020.
Wow. Netflix has been terrible. Netflix is maybe one of the worst of the mega caps. Meta, also not great. But Netflix is... I don't know what the fundamental story is there. Sure, there's some reasoning. But the chart, can't own that.
Well, and
So
even
lots of mega cap.
And even Amazon, Amazon, not a bunch of differentiation in return between the S&P since August of 2018.
So what, all you've got is Google,
NVIDIA, Tesla.
NVIDIA.
But even NVIDIA really hasn't done anything on a relative basis since summer of last year.
Same with Palantir. When's the last time you heard anyone talk about Palantir?
It's been a while. But that's what happens with price, right? It also hasn't done anything since July of last year. So I don't know that we, if anybody's out there saying, oh, this has been a narrow markets since summer of last year. It's just been the big ones. That would be absolutely false. The mega cap growth names. I mean, you brought up Google. That has
Google,
been.
that's about it. Broadcom. The other top holdings in NGK that we haven't covered are Tesla and Broadcom and Eli Lilly. Interesting to see Eli Lilly in mega cap growth. I guess I can get that. Broadcom fell apart. When I say fell apart, I mean it doesn't look nearly as bad as Netflix, but it's been sideways
Since the summer of last year. So really since summer of 2025, it has not been a mega cap process. Some might even call that rotation. And we just got done talking about small cap. Are we seeing a really nice rotation from mega caps into small caps? Evidence seems to be there.
Under the surface seems to be there.
Yeah.
I mean, if you pull up a chart of MGC versus IWM, like most things, I will say one thing that's intriguing about IWM is it's not just a Russell versus S&P thing. I mean, Russell versus quite a few things has this basey look.
Yeah. Well, then you look at the things that are leading in there here to date. I know we're only 2 weeks in, but you're talking about aerospace and defense, semiconductors, metals and mining. It's not like we're talking about small cap staples, things like that. It's growthier type names in the small cap arena.
Small cap tech.
Yep.
Small cap industrials. Regionals really haven't done anything. I mean, I'm sure they're technically out. Yeah, I mean, they are outperforming year to date. Like Dave said, I mean, we've been 2 weeks into a 52-week year. I don't know. We'll see.
Even if you look at like a relationship like IWO versus SPYG, so small cap growth versus large cap growth, kind of bottoming at a logical place here and breaking a rate of trend that goes back to 2020, 2021. And before we popped on here, you brought up small cap tech outpacing large cap tech since summer of 2025. So it seems like we have some evidence here that some rotation from large to small since summer of last year. Wouldn't you know it, markets change and we must adapt.
That's very true.
What do you think about emerging markets?
Oh, man. I like them. I want to be involved. I mean, I guess we are involved now. I mean, it's pretty nice. Again, could be Lucy. She could pull the football from it. I like it, though. A lot under the surface to like. I would say Europe kind of calmed down, but emerging markets, especially if you look outside China, pretty good. Latin America. Kevin brought up Latin America this week. Mexico, EWW.
Yeah. I mean, Mexico is about using EWW is about to go to new all-time highs. It's not there yet. We're right at the 2013 highs, so think about that. Mexico's had 0% return with heartburn in between since May of 2013.
Good relative chart.
Yeah.
I think so. Korea. Miss Korea. Korea's gone, man. But good.
Yeah, very good.
Maybe not. I mean, I guess you could.
And what does it say when, your largest piece of emerging market like EM is China, which is underperforming, but then you've got things like Taiwan, South Korea, Mexico, South Africa.
I think Argentina kind of bounced back too.
Right.
I haven't looked at it over the last week, but yeah, still holding up here. Trying.
So not too shabby. I think it's interesting that potentially could be accelerating as the dollar's moving higher since the start of the year.
Yeah, what do you think? What is up with that? Because we got the dollar is back over a 200-day. It's a downward sloping 200-day. We are still below 100 on dollar index. But yeah, you're right. Dollar's been going higher since basically bottomed right before Christmas. Precious metals have had a good start to the year, though.
Right, yeah. Precious metals also higher. Does one thing break, or is it just some things are in correlation at some points and sometimes not?
Or it's just, it's the price of precious metals is just outpacing the increase in the value of the dollar.
Yep.
value of precious, right? And so you look around the world and other currencies, and silver and gold are even more extreme. But yeah, if the value of an asset is going to go up more than the daily or weekly change of the dollar, then you can still go up. It's, I mean, the dollar was still a headwind in theory, but you're just battling through it.
Well, and I wonder what's next for like gold and silver. When you think about investor psychology, if you haven't been part of this move, what are you doing now? Like, what do you do with?
I mean, that's really tough because also I assume how far? I would say what this really kickstarted. Now, gold and silver had a good start to. We've talked about this a little bit in the client letter too. Gold and silver had a good start to 2025. They just weren't doing a ton versus equities as far as like a relative chart and looking for like a big multi-week, multi-month move. That didn't really start till, I would say, the summer. So now you're going on 2-3 quarters. Gold and silver have been all the rage, right? Oh my gosh, you see it everywhere. And now what? I think Costco's limiting how much silver you can buy.
Oh, really?
Yeah. There's a whole craze going on over in Korea and Asia with people, just retail people lining up to spend thousands of dollars on gold and silver bars.
Yeah, it just kind of feels like, I'm not saying the move is over. I just, we're in the risk management business. So if you haven't been involved, and kudos to you, I know some of the models that I manage have some, but as a friend once said, you have a manly position in precious metals.
It's been good.
It's been
last year.
But if you haven't been involved, now what? Because, man, it wouldn't be bad to see some consolidation.
Well, and so back to, I was being way too long-winded about it, so I apologize. But my point, right? So you're 6 to 9 months into this. Like, you're definitely getting questions from clients. Why don't I own gold?
Right.
Why? I saw gold's up 1 trillion% in the last 12 months. Saw silver, platinum, palladium, copper. Why don't I own this? Why don't I own more? Yeah, at this point, super, super tough, both from like a technical perspective and a psychological perspective. It would be tough to get on.
Yeah.
But you could have said it in the last year. Look how much we're already up. Gold is up another, I don't know how much to start the year. Silver's up quite a bit to start the year, I feel like.
Well, I think it goes back. It is really interesting. The timing that you mentioned there is, summer to fall of last year. And we just talked about how, your mega cap growth, your mega cap tech is when that stalled out. So is it rotation in from mega cap growth into mega precious metal? Or is it just,
that would be quite the well, I think we've already seen that. So I feel like if we're going to do 2003 to 2007, I don't know, I have to go back. It would be interesting to see like which moved first, precious metals or small caps.
in what's your time? What were you looking at? What?
Like 03 to 07? Like coming out of the 03 bottom, which, like, obviously we got small cap outperformance for a few years there after the .com.
Yep.
But I wonder if gold and silver.
You're not wrong. Gold. That's interesting. I think you're building a thesis right here, live on the spot. You look at gold, using gold futures versus S&P futures, outperforming basically since the .com bust through 2011, and then you had small caps outperform from the .com bust, and additionally out of the 03 bottom, because it was down too. But what's interesting about your example, we talked a little bit about emerging markets, but international also outperformed during that period. Yeah. So you had small caps, you had precious metals, and you had international outperform 2003 to 2007. Is this a repeat? I think that's a good thesis. I think that's the evidence is there for that thesis.
It's a decent attempt. I think it's the best attempt, for emerging markets that we've had. If you look at the relative chart, I could say January 2021 was a decent attempt. above a relative 200 a day, you're coming out of a base. Could we get that again? We could. It's not like we've broken a long-term rate of trend here. If you go back to the, I'm looking at EEM versus S&P, the late 2010 highs. But I think you got to take the trade.
Yeah, you take the trade, and I wonder, the last 2 years, great market performance, especially if we focused our eyes on the S&P. And the prior 2 years saw underwhelming outperformance from stocks within the S&P, meaning not a lot of stocks outperformed the index it was in. And now with the Magnificent Seven, FANG stocks, mega cap, breaking down on a relative basis, and I'm not saying that trend is over because it could rear its head quickly, but you wonder if 2026 is going to be a year where a lot of stocks do outperform the S&P. S&P moves higher, not crazy higher, but there's just a lot more names. And I hate to use the term stock pickers market, and maybe it's not because there's more names, don't know. But anyway, that you see a higher percentage of stocks outperform the index because mega cap is actually a headwind while things underneath the surface do well.
I mean, I think, just year to date, how much the NASDAQ has struggled. NASDAQ's still not above its late October highs. I think you're right. I think that comes through, right? That's going to show up a lot more in the S&P. We talked a little about it earlier, but one thing that's impressed me, at least this week, is super short term, but including today, if you look at Russell versus NASDAQ, NASDAQ will start the day off pre-lunch, early morning session, outperforming. And then by the end of the day, it's all rotated back to where Russell, we get to the finish line, 4 o'clock, 3 o'clock where you're at. And lo and behold, Russell outperformed on the day.
Yeah. I mean, could be everything but megas type of year and international. And
which would be super frustrating. I mean, right? I'm sure it's gonna make the S&P pretty wonky. Maybe not. I mean, the NASDAQ can still go up and just underperform.
Well, what I find interesting, and I guess the way we think about markets and top-down analysis and adaptive is, okay, so we have weak mega caps starting summer of last year, following through start of 2026. Of the mega cap names, however, NVIDIA and Google are holding up. Okay, and when I say holding up, I don't mean like they're outperforming. I just mean of the mega cap names, while the beach ball is under the water, the air that's in that beach ball is really filled with Google and NVIDIA.
Yeah.
And so if mega caps come back, you wonder what type of move could come out of NVIDIA and Google. Or the other things were precursors and those catch down. That NVIDIA and Google catch down. Could be. What do you think about energy? Energy is not a big segment of the S&P 500.
No, and typically not a very big segment on this podcast. But it got to all-time highs this week, right? Well, no, it didn't. Close. Trying.
But I mean, it's only 3% of the S&P 500.
That's crazy. It's not like that's new news, but it is crazy. I mean, the energy sector. It's amazing how much those things can fall. I mean, I would love to see. I'm sure there's data around like what it was in 06, 07, 08.
Mm-hmm. But I mean, since the beginning of the year, energy's outperforming the mega names. You look at,
and it would go with the small cap theme. You would think.
Mm-hmm.
What about? And there is a specific chart I want to talk about. What do you think about financials?
Yeah, I really thought when I think about financials, I think about JP Morgan, right? Good bellwether, bellwether stock, still holding up just fine on an absolute basis. Thought it was going to pull off the breakout versus S&P 2 weeks ago. Not yet. Still, trying to stay above a relative 200-day. And then, financials overall, still an uptrend. So that's good from a bullish perspective. But on a relative perspective, still a lot of work to do. I mean, XLF versus S&P still below a falling 200-day, still below the 2-week crash that happened during the financial mess back in March of 2023. So broadly speaking, still a lot of work to do.
It's tough. It's tough. And you have these, it has its days where I think, okay, and it's not bad on an absolute basis. Like I'm looking at KRE again. Bank of America, though, made all-time highs, got above its 08 highs, pre-GFC, failed. That's one to keep an eye on. But yeah, lackluster. I thought we were really building towards something. Maybe we still are.
Yeah, when I look at like JP Morgan versus Microsoft versus Apple versus Amazon, things like that, it is interesting to see it kind of turning a corner and breaking downward rates of trend, and in some ways building out a base. So it'll be,
I can see that.
Be interesting to see how the year plays out for financials, but still a lot of work to do. But on an absolute basis, like just on their own, so not talking about opportunity costs, just on their own, still an uptrend, and that's a quality characteristic for the market for sure. You know, when European financials are in an uptrend and American financials are in an uptrend.
Lots of things in uptrend. Breadth pretty good.
Yeah, breadth not bad. Not bad at all.
Percentage of stocks in the NYSE composite that are above a 200-day moving average, that's back above 70% for the first time since December 2024.
Yeah. That's from Subu Trade. That's one of the better charts out there, indicating that we have that.
And we stayed up there, right? So this is not oh gosh, we're back at 70% now. I mean, we basically tumbled around between 65 and 75% for, almost a full year. And ended up kind of petering off December 2024. Obviously, we got the tariff tantrum April 2025. But yeah, recovered all of that. Advanced decline line looks good. Whatever happens with this mega cap thing, whether this is another, just a couple quarter long or whatever, they've stepped up during the mega cap, the lackluster mega cap performance. So
right. Well, and even like out of the mega cap, semiconductors still holding up well. You're seeing a what I would call a reset or resurgence into like quantum computing type stocks on a relative basis. That's not risk off, right? If risk is being taken in the quantum computing space, semiconductors, and even like metals and mining, uranium setting up again.
Uranium looks good. There's a battery tech ETF. I can't think of it. I think it's a lithium battery.
Like LIT? LIT?
Yeah, that might be it. Is it LIT? It looks pretty.
Or BATT?
I think it's BATT was the one. I feel like BATT might have a better. No, they both look pretty similar. Some good movers. And you know what? A lot of these themes, Dave, are just themes from last year. PM, aerospace. It's not like we got to. Energy is a bit of a new one. We'll see if that holds up. But not a lot of things where we got to January 1st and then all of a sudden market participants said, oh, you know what? We want to start buying Korea, Peru. All this stuff was working in Q4. A lot of it in Q2 and 3.
Yeah, and maybe the fact that you're seeing miners outperform the metal, still a quality characteristic, and that the expression internationally is you're still seeing strength out of international financials, and you're still seeing strength out of international tech and international materials. Little different spectrum, for how many years investors have been able to park in the index or park in the Meg 7 and get return. That might not be the case starting summer of last year. That your return in some of these other areas. I mean, it's a little bit more unique than the 3 years prior to that. Things shift. Can you adapt?
It could be a real shift to value.
Right. So I want to highlight the supporter of the podcast at this time, the Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. And what I find interesting about that product is, believe it or not, it's not beholden on the performance of mega cap or mags. It's not, there's so many, when you look at ETFs across the universe, so many of them have exposure to the mega cap names. And I get it. I get why they do.
Yeah.
But we might be in a year of differentiation. We might be in a year where there's different things that provide the performance rather than the mega cap names. And what a blessing that would be, right? Like, we talk about these mega caps underperforming. In a lot of scenarios, that's not ideal, right? If we didn't have broadening breadth, if we saw risk off type behavior, you'd be like, well, maybe the correction is here. And it still could be. I don't want to give the illusion that somehow we know that there's no correction coming. But all these other pieces of evidence point to just a shift in opportunity cost where the return comes from. And that's okay. That's why we use technical analysis.
I think you can see it in momentum funds as well.
Yeah.
Depending on, are they choosing from the S&P? How often are they rebalancing? I mean, a lot of those. I mean, SPMO, I think SPMO peaked in now that makes sense, right? Because so did the NASDAQ. Now, it's not a bad looking consolidation. This could certainly take another swing to the upside. But I'll just say other momentum funds have, that are not tied to the S&P, maybe have a larger basket to choose from, like ADPV. I think it's just really benefited them a lot more. So yes, I'm excited. I'm always excited for environments when we are moving away from the S&P.
Yeah, it's great for technicians or money managers that use technical analysis. You can identify when these shifts happen. It's great. It's great to have differentiation. Nothing wrong with that. What about some relationships? Anything that you're looking at there?
I would say, as far as breadth, a big one that I think just adds more to this, like, okay, this really could be serious, would be QQQJ versus QQQ. That's, again, you've got this base look that we've been working on for, over 2 years. I think high beta, low vol continues to hold up pretty well. And now, of course, I can't find it, although I did look at it.
Yeah, no, it's still uptrend, quality uptrend.
Yesterday, it's down today, but yeah, it's fine. And then, right, what is low? It's considered high beta. Again, right, you're just choosing from the S&P. So just because there could be other high beta names that are working, right? And a lot of these are large cap growth. This is growthy.
Yeah, it's a good point.
App, Tesla, Micron, Robinhood. These are all names that if high beta rolls over, I don't think it means the market rolls over. It's just very highly tilted towards, I'll tell you what, we can find plenty of high beta in value and small caps. I can tell you that. So
yes, very true.
What about you? You have any relationships that you are?
Well, besides my wife, I always keep an eye on junk versus aggregate bonds. I like that continues to move higher, still within a range that goes back 2 years, but it's holding up. It's moving higher. I view that as risk on. I think that looks good. And I think it's notable where some of the equal weight stuff is and how it's doing. If you look at equal weight S&P versus S&P, bottoming kind of where it needed to, or even the Russell 1000 equally weighted, not bad. Those would be some for me.
I like it.
So still remains a risk-on environment out there. Meanwhile, you got MEGs and F and GS, FANGs underperforming the S&P. Beggars don't get to be choosers. We haven't talked about crypto yet.
Yes. Crypto, I mean, a pretty good week. Bitcoin's back above 95. Well, yeah, broke above 95, got up to, I don't know, 97, 98,000. It's like right under 98,000 or maybe right to it. We'll see. 200 days started to kind of roll over. Not quite as a firm believer as I would be that this will be an easy recovery. And I do think the long-term chart is I guess, it can do whatever it wants. But I wouldn't be itching yet to go buy Bitcoin for a long-term trade right now.
Right.
Now, if you want to, it's not a bad risk reward
On an absolute basis.
on an absolute basis. If you want to use 94 as your stop, I mean, that makes sense. I would not chop your head off if someone said that to me. But just know that you got some headwinds. You've brought this long-term multi-year trend from, late 2022 was broken back in November. You're below a 200-day that is now starting to roll over. It's not the most sharp decline yet, but it's rolling over. It's just not as easy of a buy the dip scenario as it would have been 2-3 years ago.
Right. What about bonds and rates?
Bonds and rates. Everyone wants to know about the bonds and rates. I got nothing.
Still in a range. And it doesn't always have to be bonds down, stocks up. I mean, for how many years it's been bonds down, just period.
Bonds down straight up, yeah.
Bonds are still in a correction that goes back to July of 2020, August of 2020. And really rates haven't gone anywhere for 2 years, 3 years.
Yeah. But I think you could argue 3 for sure.
And markets might like that.
And I think about that sometimes. And I kind of put the dollar in the same category.
Yeah, like if there's not
rates in the dollar, I think the market's just happy when they chill the frick out for a little bit.
Yeah, just move sideways, not a lot of change. It's kind of like, when you're playing a board game, you don't want the rules changed all the time. Your input costs, your dollar, your rates, you don't want those changing all the time.
Right.
For moving sideways.
There's the risk-free rate managed to David and I now. I don't care about the risk-free rate, but there are trillions of dollars out there that are managed, whether it's banks or other institutions or sovereign wealth funds or whatever. I mean, we do, right? We know fixed income, we've talked about this so many times, much larger market than the equity market. And those people don't want that stuff changing all the time. You're managing $1 trillion in fixed income. Moves in rates are a big deal to you.
Right.
Just having them hang out for a bit. I know everyone wants to see their, refi or mortgage, at least me, because we bought a house last year. So I'm ready to get them back down. But it is what it is. We're just hanging out. We've had rate hikes, right? I think Kevin and I talked about that last week. Maybe it was you and I the week before, we've had rate decreases since September? And rates have just gone up.
It's almost like the bond market knows more than the Fed.
Are we getting a new Fed chairman? That's what I've been.
Maybe John Harbaugh?
Ooh.
No, he's with the Giants now, I guess.
With the Giants. The Giants won the Harbaugh lottery.
Yeah, maybe Jerome's going to take a job with one of the openings. I mean, we got so many coaching.
You said 8 coaches fired and 1, and then Tomlin stepping down.
Yeah.
I mean, Baltimore's right there.
Yeah, maybe Jerry's going to career change.
Did you see they unveiled the new Redskins stadium picture?
Yeah, what'd you think?
I guess. I don't know why they need another one.
It's the nature of the biz, man. Always finagling for the new home.
They're moving the Chiefs stadium. I'm getting tired of it. They're moving Arrowhead. They're not moving Arrowhead. They're just going to build a new stadium.
Right.
You think the Packers would ever do that? No, they wouldn't. I don't know If the Packers ever move from Lambeau, we know society is done.
Yeah, that's true. That's a good point. I mean, shoot, even the Bears are talking about a stadium in Gary, Indiana.
No way.
Yeah.
Is that like a big suburb? Do a lot of people commute from Gary into Chicago?
Yeah.
Probably. You get to live in Indiana and then you get your Chicago salary. It's probably not a bad gig.
Yeah. Home of Michael Jackson and the Bears.
Something to think about.
Yes, exactly.
Just saying.
I know our teams are not in the playoffs. You got a team? You got a second team? Is there someone you're...
Well, Eagles are out now. So wife and I are both done. For me, I think... Well, I really wanted the Panthers to go. That was my first. I wanted the Panthers to do well. It was very exciting around the Charlotte metro area to see. It was exciting for the Panthers to be competitive this year. I mean, I know they went 8-9, but
I was impressed that they had the old QB back there introducing the game.
Cam Newton? Yeah.
I thought they were beefing still, but there he was with his crazy hat on.
I guess, winning cures all.
Yeah, it's true.
I guess. Maybe. So who do we have? I guess I'd have to go Seahawks.
Okay.
Seahawks, they have a lot of Gamecocks on their team.
Oh, I didn't know that.
Yeah, so I'll go with them.
Yeah, I kind of want to see Josh Allen get his.
Yeah, that would be nice since the Chiefs aren't in.
But I also love good defense, and I just love the way the Texans play defense. Probably one of those two. Although I'm also a big Brock Purdy fan, so I don't mind. Shanahan's a good offensive coordinator.
Kevin and I talked about this, and we won't get into, but I'll leave our listeners with this. Look into the conspiracy theory about the 49ers and their stadium being next to the power plant.
Yeah, I saw that. But hasn't that been the case for a while?
But they've been getting injured for a while.
Okay. For 10 years, 20 years? I mean, I could see it. I just feel like
data for sure over the last 10 years. They're by far the highest injured team.
Man.
It's an interesting theory.
It is an interesting theory.
Something for your 3-day week. If you find yourself bored on Monday, your 3-day weekend.
Yeah, we'll put our listeners on it. They can let us know. What do they think?
We should always leave our listeners with a new conspiracy theory for the week.
I like it. We'll do it. But yeah, 3-day weekend. You got plans? 3-day weekend?
I know we're going. I know one of the nights we're going over to a friend's house for a fire pit and a pizza. But other than that, nothing yet.
No, it's good. It'll be nice for the market to be closed. I think it's appropriate. I know Martin Luther King wasn't a perfect person, but either was King David, and got a lot of respect for the man who, led people through a tough topic. And one of my favorite quotes from Martin Luther King was, "Darkness cannot drive out darkness. Only light can do that. Hate cannot drive out hate. Only love can do that." And so I think it's appropriate that we have the day off. And so I hope you enjoy it. I hope our listeners do too. And we ask our listeners that if you appreciate this, share it with others. Give us a high ranking on your platform of choice. That is a compliment to us. So Ian, thanks for doing this again with me, man. We'll do it again next week.
Have a great weekend, everyone.